I was on the trading floor at Lehman, and when Jim did that, a number of us just stood up and said, thank God, because central bankers at the end of the day, they're like the pilot on an airplane, 767, with engine trouble. They want the fannies in the seats. They will not tell you the truth as we're heading toward the iceberg. And they were hiding it, and Jim called them out, and I think he did. Thank God he did, because we needed action. Here today, we're in a similar situation. Think about 2015-16. Central bankers promised us over and over again 8 rate hikes in 2015 and 16. And guess what? They hiked twice. So at the end of the day, the global economy vetoed the Fed policy path. And U.S. economists, almost every one of them, are too U.S.-centric focused. Right now, there's $62 trillion of GDP outside the United States, and there's 18 in. 62 and 18. So at the end of the day, we're looking at China melting down here. You've got a Fed that's tightening policy at the same time, reducing their balance sheet in September by, it's going to go up to $50 billion a month. And at the same time, the Trump administration has their fingers around the China neck with tariffs. So there's no question in my mind, once again, the global economy will veto this Fed. They will break the Fed over their knee within the next 6 months.
Why?
Because the global economy will feed back to the U.S., and it's already happening. Do you know in the last, as the Fed has been hiking rates here in the last 6 months, emerging markets have crumbled. Global GDP is down in terms of estimates almost 100 basis points. China is a major economy. I think China is actually in recession. Keep in mind, 10 years ago today, even in the spring of 2008, we were in recession and nobody knew it. And with the weakness I'm seeing in China, the credit tightening conditions in China that are leaking over to Australia now, they're leaking over to Canada. Credit conditions in Canada are the tightest in 10 years. And it's all because of the Fed's aggressive policy path, which I think is the right thing for the U.S. economy. They should be aggressive, but they will blow up the global economy within the next 6 months.
Yeah, it's interesting because last night I was looking through some English language Chinese media, just trying to get an idea as to what the Chinese media was saying about Trump and about the trade fight, and obviously the stuff that South China Morning Post, China Daily, the English language papers over there. And there's a lot of talk about the economy. There's a lot of talk about their currency, but not a lot of talk about the fact their stock market is down 20% in 6 months. Is that kind of the big warning signal that maybe not enough people are paying attention to, Larry?
Yes, and if you look at the Shanghai composite, you're talking about a trend line going back to the 90s that's right now about to be broken. And it's very similar to, they have central bankers too. It's the same thing. These guys are telling us they're doing 6.6, 6.7% GDP, but the central bank has now had to come up with emergency transfusions for the economy in the last 3 months. So why, if you're growing at 6.7%, why are you doing emergency financial conditions?
They put together a $199 billion, what they call war chest, to combat these tariffs. That was a story last night. Here's a story right now, a headline on the South China Morning Post. No end to the yuan slide against U.S. dollar as trade war bites. The currency market is the big one to watch right now, is it not?
That's the thing. So we have an index of our 21 Lehman systemic risk indicators that we've been working on since 2010. And one of the major components now is the yuan, because it's a $12 trillion economy. You can't have a $12 trillion economy whose currency weakens by 6, 7, 8% in 3 months. It's going to obliterate the global economy. Emerging markets are suffering. Their trading partners. That's a major wound. So if you track the volatility of the yuan versus the VIX, it's a very good leading indicator. We saw this in 2015. We saw this in 2016. Each time the yuan weakened very fast in a short period of time, it took the VIX with it. And that's what's happening. And at the end of the day, if you're the Trump administration, you have the midterms coming up in November, you are going to put the fire on the feet of the China government within the next 30 days. That's your window. So expect hardcore action here. You've got a final determination on the tariffs in terms of finality within the next couple of days on the $16 billion. And then 3 weeks later on the $200 billion, you've got finality. So it's the news cycle is very confusing because you hear these, every day it's a different tariff.
Yeah.
But we're talking about finality.